So whether you're investing in stocks or collective funds, when you sell these investments, the tax man is going to come after you. ISAs, that's individual savings accounts, are a great way to get around this. And don't worry, they're nothing dodgy. They're government incentivized schemes in order to encourage us to save and invest. And do you know what? They're pretty generous. So in today's episode, we're going to have a look at the taxes that the ISAs shelter you from, and then the different features of the 4 different ISAs that are available.
So one of the problems with saving and investing is that you're going to pay some tax. The good news is though, there are some exemption limits, so amounts that you can earn up to before you have to pay that tax. Let's look at savings first. If you're a basic rate taxpayer, then actually you can earn interest on your savings up to £1,000 before you have to start paying tax. If you're a higher rate taxpayer, it's a bit lower, only £500. Dividends, that's income from shares that you're invested in. Again, there's an exemption limit. It's £2,000 in this case, but you will pay tax if you earn dividends more than £2,000. And similarly, if the value of your investments rises, then again, you're going to pay tax. It's called capital gains tax, and it means that you will pay that tax over that amount.
So how does the ISA get around this, the individual savings account? Well, it is just a normal account, but it comes with these special tax privileges that the government has agreed. And you're allowed a certain amount of money into it each year, but anything that happens to those savings or investments, the taxman doesn't care about. In fact, it makes it really easy because you don't even need to report that through your tax return to the HMRC. So any saving or investing that's done within an individual savings account is just really easy and you don't pay any tax on it. Now, there are 4 different types of ISAs and they come with slightly different features, so we're going to go through those. And you're allowed to open as many of these ISAs as you like within a tax year, just not 2 of the same within a tax year. And there's also an annual limit as to how much money you're allowed to put in to those ISAs. Because of course we can't have millionaires and billionaires just using these and getting everything tax-free, right? And the annual limit is £20,000 in the current tax year, and you can spread it amongst those ISAs however you like.
So what are those 4 types of ISA? Well, we're going to look at 3 first, because these are the 3 that you can spread that £20,000 around with without restriction. They're the cash ISA, the stocks and shares ISA, and the innovative finance ISA. There is the 4th, the lifetime ISA, but that comes with a lower limit, and we'll come back to that in a moment. So let's look at cash ISAs first. These are really the simplest form of ISA. It's just cash in a savings account, but any interest you earn on that cash is free from tax. And you typically use these for shorter term goals. Your money is not really at risk when it's in a cash ISA, unlike when you're investing and the value of your money can go up and down. Now, most providers will offer easy access accounts where you can take your money out straight away, but they'll probably also be offering maybe 1 to 3 year fixed deals where your cash is locked in, but in return, you'll get a higher rate of interest, and you breached that £1,000 ceiling.
Number 2, the stocks and shares ISA. Now really this is going to be your main investing account because of course you can put all the way up to that £20,000 limit, so it should provide for most of your investing needs. And you can invest in pretty much anything mainstream. So funds, investment trusts, ETFs, other passive funds, stocks, individual bonds, you pretty much name it. Now, of course, you're going to be taking some investment risk. So this is about longer term goals. Remember, for company shares, the advice is generally you need at least 5 years. Now, any investment provider worth their salt will offer an ISA, and I think what we would say that you should think about is using up that £20,000 contribution first. If you invest outside of an ISA, those taxes that we talked about, those 3 taxes, so the capital gains tax, that's the rise in the value of your investments, the tax on dividends, that's income from shares, and also interest that you receive from bonds, all those taxes could build up really quickly if your investments perform quite strongly. So you want to have them wrapped within an ISA. Make sure you use up that £20,000 first.
Right, so the 3rd type of ISA, the innovative finance ISA. Now, these aren't so common. They're a bit more restricted actually in terms of what you can use them for, because essentially they're designed for peer-to-peer loans through a platform. Now, peer-to-peer is basically just lending to a person or an organization directly through a platform. So if you make these investments through an innovative finance ISA, there's no tax to pay on the interest you receive from your peer-to-peer loan. But remember, peer-to-peer loans, it's a fledgling industry. These are high-risk investments. So you really want to consider just how much of your money you might be putting in one of these. We probably say start small on this because it is the riskier end of the market.
Okay, number 4, the lifetime ISA. Now these come with a bit more restrictions because they have a very special bonus that's paid by the government. I'm going to get onto that in just a sec. The restrictions are that you can only open a lifetime ISA if you're between the ages of 18 and 39. After 39, you can keep contributing towards that ISA until you're 50 years old. But that's not the only restriction. What you can use the money for can only be one of two things. The first is buying your first house, and that can have a maximum value of £450,000. The second thing is however you like, but only over the age of 60. So it's kind of like a pension savings product. Now, it can be invested in anything, so you can go for cash or stocks and shares, but there is a tighter limit on how much you can put into a lifetime ISA in a tax year, and that's £4,000. So unlike the other three, which can go all the way up to that maximum £20,000, this can only have a maximum of £4,000 contributed to it in a single tax year. Now you're probably thinking, okay, all these restrictions, what's the point? Well, the government will give you a 25% bonus. So for every £4 you put in, they'll give you £1. So if you put in that maximum £4,000 in a year, they would give you £1,000 of free money, which is so generous. You absolutely should take advantage of it if you're within the right age range. And of course, they'll continue doing that all the way to the age of 50. Now, the only thing to think about is not everywhere actually offers lifetime ISAs, which can be a little bit disappointing, but with these amazing bonuses, highly recommend.
Okay, final things to note. First of all, check that the firm that you're opening your ISA with is covered by the Financial Services Compensation Scheme. You'll probably find it in the terms and conditions of the account. It just means that you're covered for fraud, although if you've got an investment style ISA, it won't cover you for picking bad investments that just go down in value. Just something to remember that. Also think about charges. Investment type ISAs will almost certainly come with an annual management charge, and then there may well be charges for the underlying investments that go in your ISA. So do compare those. Also, trading charges, they can vary wildly between providers, so think about that too. And final thing, check transfer out charges. Now, a lot of providers have got rid of these, but some haven't. And if you're unhappy with your provider, you want to move somewhere else, those charges can add up. So again, check that out.
So what we've learned is that saving and investing actually comes with taxes. And by using an ISA, an individual savings account, you get around this. Any activity that's done within those is free from the tax man's glare. There are 4 different types, and these should cover most of your investing needs. Please get in contact if you've got any questions. We really hope you enjoyed the video. Subscribe if you like what you see. We'll see you next time.
Goodbye.